If you allow us, we'll hit it now.
Sure. Hold on. I'm just testing my microphone.
You're good. You're good.
Okay, hold on. I just want to make sure so you said audio levels good?
Perfect.
Perfect.
Okay. Yeah, we can go ahead and record. That's fine.
All right, Kyle. So we're very excited because I imagine this is the first time you're in a different set of audience, an audience that just watches technology, crypto, but in Spanish. But every 5 episodes, we bring an English-speaking guest. So I guess this is the first time. So the audience from Colombia, Mexico, Argentina will get to know Kyle Samani. And this is just totally awesome to actually have you here for the first time.
Hey guys, Herman, Dario, pleasure. Thank you all for flagging me down in Singapore and explaining to me about the show. So excited to be here and talk to a new audience.
Yeah, I mean, let's talk a little bit about Singapore because I think it was very interesting. How long did it take you to just go through all the videos and material that we cover in Token 2049 and Breakpoint? It took me almost like 2 weeks, and I still have like 2 or 3 videos that are lagging behind. But I've never learned so much in a conference as I did in Breakpoint 2024.
Yeah, it probably took me a week or so after Breakpoint, and I didn't go through all the videos. I went through probably 70%, 60-70% of them, and I do listen at 1.75 is my default. So yeah, but even that took me a while.
Well, when English is your second language, max is like 1.5, so you got to pay attention, and especially when it gets a little bit too technical. Talking about a little bit of technical, I don't know. I think you figured it out. We're very good students of the content that you post out, the blog post and the material. I think the way that I actually was able to hook you to do the podcast is I actually showed you that it was Camilo. Camilo is also Camilo leads. Dario is my co-host, and Camilo is managing partner at a venture fund called Vero Norte. So he invests in funds of fund, and he helped me explain what composability was just from one of the videos. And I don't remember which conference it was, but we did like, I don't know, Camilo, it was like 6,000 or 15,000 views. Basically, us regurgitating everything you had said in English, but in Spanish. So I think the podcast, I mean, we're probably the #1 fans of Solana in Latin America right now. So it's kind of cool. It's kind of cool. So before we get started and do an introduction, I know I have to read a disclaimer. So if you allow me for 5 seconds, I'll just get this over it. Dario?
Yeah. You are ready?
Sí, mostrame el disclaimer.
No sé,
yeah, so I know I have to read this first. So although our guest this week is a managing partner of a registered investment advisor, nothing in this podcast should be considered an offer of Multicoin's investment advisory services or should otherwise be confused for investment, tax, legal, or other financial advice. All right, so we got the legal part going. So Kyle, before we get started, why don't you give us a little bit of your background, Multicoin, how you get started, and also tell us a little bit. I heard that you actually like biking a lot. So probably in a few years, in a few months, you'll come and bike down in Colombia because we definitely have. One thing is riding in Texas, another thing is riding in Colombia, and we have a couple like pro cyclists, the ones that have even won Vuelta a España. They constantly pedal in the Giro d'Italia and Tour de France. So we got the pros here. So whenever you want to come and ride down here, you just let us know.
I love just looking at your background. I see all the jungle trees. It looks pretty sweet. I would love to go ride in Colombia. I have not. I was actually supposed to go to Colombia for my 30th birthday, which was during COVID, and obviously because of COVID, it got canceled. But I still intend to make it down there one day.
Try to make it to Medellin, and we'll show you a good time around here, and we'll go biking, and we'll go to nice places. I mean, we're all locals from Medellin, so we'll show you around. Nothing beats going out with a local.
That's for sure. I hate being a tourist.
All right, so give us a little bit of your short, quick background, guys. I know you answered this on most of the podcasts, but this is a new audience, so they want to know a little bit about you.
Sure. So, hi everyone. My name is Kyle Samani. I'm a co-founder and managing partner in Multicoin Capital. I grew up in Austin, Texas, which is where I live today. Did a little bit of Spanish in middle school and high school. I'd say I'm pretty broken at Spanish at this point, but un poco here or there.
Okay.
Went to NYU, studied finance. I've been programming since I was a little kid. Have always been kind of passionate about tech startups. After college, I did my first tech startup in the healthcare space here, building software for hospitals. Ultimately, that startup did not work out, but I learned a lot about startups and entrepreneurship, decided I wanted to work in an unregulated industry instead of a regulated industry. And so made the decision ultimately to get into crypto over the course of 2016, 2017. And I remember it was the Gnosis ICO in the middle of May of 2017. And after that happened, I think they raised like $12 million in 12 seconds or something. And I called Tushar. Tushar was my best friend and is now my co-founder here at Multicoin. And I was like, Tushar, we gotta go for this. And he's like, yeah, this is the moment. Let's go. So made the decision then to launch Multicoin. Took us a few months to figure out how to launch an investment firm. We had no idea what we were doing. Neither of us had formal training in investing at all. Neither of us had worked at an investment firm. So it took us a little while, but ultimately we launched our fund on October 1st of 2017. Today we manage roughly $3 billion or so in assets across a hedge fund and a series of venture funds.
Cool. Very cool. So as I was saying in the beginning, I try to listen to almost every single podcast that Anatoly has posted out there. But the biggest problem is understanding. I mean, I probably get like 10, 50%, and then I have to go to Dario and Camilo. Dude, did you actually understand what this means? So I had to study, for example, the phrase, what is Solana? A stateless composable machine that runs at the speed of what it's physically possible. And man, breaking that thing up, it was like Camilo and me like dabbling for 30 minutes. But then when we had the opportunity to watch your video, what you do that it's pretty cool for us. I mean, we're engineers and we were born in an age where we're not adept to the world of coding. We're a little bit more analogous. But if it's explained to us without using analogies, because I know you don't like analogies to explain stuff. But if you give us a more thorough explanation and you make it from a business perspective, then we get it. So, for example, one of the things that you helped us understand is why composability is so important. So why don't you tell us why the keyword composability is such is of such importance in Solana, and why basically makes it I mean, to me, it will become, the outcome will be Solana will have the most amount of transactions and the fastest, but why composability is such an important element in explaining Kyle's terms.
Yeah, composability is really important. And I think there's kind of a few different layers through which you can think about composability. At one extreme would be atomic on-chain composability. And this would kind of be like the idea in flash loans, meaning I borrow some money and I return that money by the end of the transaction. This is a really, really cool concept intellectually. And it's not super useful, but is like very cool intellectually. And then there's just general composability of, hey, I've got an asset that's output of protocol A. I want to use that asset in protocol B. So again, the example here would be I have a Uniswap LP position. I want to use that as collateral in Aave, let's say. And then there's that's kind of the next less extreme form of composability. And then as you go kind of from there, you start getting into again, things that I don't think kind of fit the formal definition of composability, but I think about them on a composability spectrum. And this is really just like having a common standard where everyone knows to read and write from a single place. And like what I mean by that is, if you open up MetaMask or Rainbow Wallet or Coinbase Wallet today, and let's say you have ETH on 4 different chains, and you have ETH in your wallet 4 different times. And that like feels like something is wrong. Like you're kind of breaking something. Like, what do you mean you have the same asset 4 times? It's weird. If you open up your stock brokerage account, you don't have Apple stock or Tesla stock listed 4 different times, right? So it's kind of like you're breaking things down further and creating more complexity. And the beauty of the whole Solana design from inception has been to preserve this single integrated composable layer so that whenever developers are reading from the chain or writing to the chain, they only have to think about one construct. They don't have to think about L1s, L2s, L3s, and all this complexity. They just think about a single system. And I think that kind of ease of understanding and that ease of integration is honestly probably more important than like just the technical composability itself.
Yeah, and it's hard and it's easy to relate. For example, I told I told Joe McCann a story. Like I was at a conference and I was explaining to someone why Solana is so important, and this young girl came to me and said, you know what, my uncle who is a rancher just sold 10% of his cows and actually bought Solana. But the issue was not buying the cows and transforming them into Solana. The issue was like when they started using Phantom, they totally got it. It was easy for them to swap from USDC, USDT to whatever coin. But when you told them to do the same thing on MetaMask, it was just an ordeal. And that thing is the one issue that most people miss. When you're like super technical, you overthink certain things. But when you're like seeing someone who's, Camilo, we see this, and Dario, we see this with our friends, which are 40 and 50, we're onboarding them and like, what does gas fee mean? You're telling me I need to leave what the equivalent of $50 in Ethereum to swap and do stuff like you guys are doing? It's super complicated. So that's one of the things that actually has helped, at least in our region, to have more adept people. And so I wanted to explain the composability, and I think the read and write is probably the perfect definition. It allows you to read and write in every single stage, and then it allows for more adoption. Because I only like asking difficult subjects. One of the other conferences or presentations that happened at Breakpoint, that if I understand 20% of what Anatoly says, when Kevin Bowers started FIAT, I understood 3%. Can you put in business terms why FIAT is such a tremendous impact and what has been achieved to present date?
Yeah, firedancer is a new Solana client written from scratch in C, the C programming language, written by the Jump team. So let's kind of unpack that statement. First, it's a new Solana client. What does that mean? So today, the Solana network is composed of 3,000-ish nodes around the world that are running a piece of Solana software on that local computer. And that computer is, downloading transactions, gossiping transactions, executing them, etc. That piece of code is written predominantly in Rust and was written by what was the Solana Labs team, and has since been transitioned over to the the Anza team. And that's like one kind of big binary file. Just imagine you go to the App Store, you download an app from the App Store. Basically, there is a Solana app that is created and maintained by Anza. The Solana system is open, meaning anyone else is free to write another piece of software that interfaces with the Solana network. And that's what firedancer is. And so firedancer is a brand new code base. It shares no components in common with the existing Anza code base. It's written in a different programming language. It's written in C instead of Rust. And it's written to be as performant as humanly possible. Written by Jump Trading, and the team at Jump Trading is they're a high-frequency trading firm. They have, I think, 2,000 employees-ish. They're one of the largest trading firms in the world. And among high-frequency trading firms, Jump is specifically known for being the fastest. So they're taking all of their accumulated knowledge and expertise and saying, how can we write a Solana implementation that is as fast as possible? And that's what firedancer is. They've been working on it for a little over 2 years now. There's now firedancer code running on both Solana mainnet and on Solana testnet. And it's still fairly small. It's kind of in, like, I'd say, beta testing kind of phase. Over the next 12 months or so, I expect the percentage of the Solana network running firedancer will increase pretty substantially. And as that happens, the network will gain a few major attributes. One, network performance should increase overall, as the firedancer code base is substantially more performance than the Anza code base. And two, it will increase the resiliency of the network, meaning if there happens to be a bug in one of the code bases, there will be another. The probability that the exact same bug exists in a separate code base is extremely low. And so in the event there is a bad bug in one code base, the system can fall over to the other code base and keep on running. And so, which is really good for improving the resiliency of the network.
Which is basically, I mean, it adds to the North Star of Solana, which has always intended to be as fast as Nasdaq. And that's the whole purpose of why this is happening, because if you're gonna put every single financial transaction and you wanted it to be fast, you want it to be the word would not be fail-proof, but you want to reduce the amount of probabilities of why this could actually happen. Isn't that true?
That's correct. Yes.
Okay, correct. So shifting gears a little bit. So in the past 3 months, we've seen Elon Musk do the following: launch the Super Heavy and grab it with a pair of chopsticks, do the Cyber Cab, and the second implant of Neuralink, and this all happened in a period of 90 days. Why does it take so long for the Ethereum Foundation to actually accomplish? How many years does it take them to accomplish anything? And that thing that you mentioned, that token 2049, just reverberated with me, because it's like you have people accomplishing so many things in a period of short time, and then you have this enormous apparatus that I don't see. When do things happen in Ethereum? At what pace? What velocity?
Yeah. So I'm not an Ethereum insider, so I can't comment based on what I know to be factually 100% true, but I can make some pretty educated guesses as to why is Ethereum so slow. I think there's kind of like a few root issues. The first is Ethereum doesn't know what it wants to be, which is pretty strange. Bitcoin has been very clear, hey, we're digital gold, and that means that we're not going to introduce change in the system. The rule, everything is set and fixed, and that's it. Solana's always been very clear, hey, we're here to build decentralized NASDAQ. If you look at, operating systems or other products, it's generally pretty clear what the intended objective of those systems are. In Ethereum, they launched in 2015, and they said it's a world computer, and the word world computer doesn't mean anything. It's a cool marketing term. It kind of sounds sexy and ambitious, but doesn't mean much, and that's okay. I don't fault them for using that term at the time. But it's now been 9 years, and we have started to see what people use Ethereum for. And very obviously, Ethereum is being used for trading and for payments. Those are really the only things that anyone is doing on any blockchain. And if you ask Ethereum people, okay, well, what are you optimizing for? If you ask different people, you'll get different answers. Some people say solo stakers at home. Some people say settlement layer. Some people say ETH is money or ultrasound money. Some people say, settlement rails for global finance, or whatever. You'll get a bunch of different answers from different people. And I think that's kind of the crux of the problem, is that it's not clear what it should be. And each of those different things I mentioned, if you were to optimize the system, will lead you to make different trade-offs in the design. You can't be the best at all of those things. So you have to be intellectually honest and say, well, which one do I want to be? And then, build for that. And I think that statement is objectively true. Again, the way in which I'm wrong is there is a defined tagline, like Ethereum is building X. And it's universally known and understood that that's what X is. And that statement just does not exist, today at all. And that's a real problem. And obviously they could try and define X. They really means, I think, just Vitalik. I don't think anyone else has the moral authority to define X. But I would guess if Vitalik comes out and tries to define X, it's actually going to piss a lot of people off, because like in the status quo, some people think it's X, some people think it's Y, some people think it's Z, some people think it's A, some people think it's B. And so if they come and say it's X, then all of the other people are like, oh, well, that's not what I wanted to build. Yeah. And so the ambiguity is created this weird situation where there's a lot of people at the table doing stuff because they think that they're building for their use case, but they're not. So defining X will be painful. Not impossible, but painful. And so I think that's one issue is, as I like to say, Ethereum does not have a North Star. And then I think the other issue is just straight up complacency. Ethereum has not really had credible competition before now. And if you've made it, so 7, 8, 9 years, and you never had any credible competition, all of your processes, all of your culture, all of your employees, all of those people don't feel any sense of competitive urgency. And that complacency is real. And so I'd say those are probably the two. And I think the core Ethereum people don't even consider Solana legitimate competition. And the reason that they say that, which I think most people would say, are you crazy? Like, how is Solana not legitimate competition? I think that's like any normal person would come to that conclusion. And I think the reason that a lot of core Ethereum insiders don't view Solana as competition is that they think they're building something else. They're not building decentralized NASDAQ. I don't know what they're building, but they're building something else. And B, they think they've always had an ideological set of views as Ethereum is making the optimal ideological trade-offs around decentralization or security or whatever. And Solana isn't making those same ideological decisions. And so a lot of them actually believe Solana is below Ethereum as like some sort of moral or ideological stance.
It's like academia building versus engineers building.
Correct. And so it's a really tough problem because it's not clear how you resolve these issues. But I'd say those are really the two things that I think are the like root of Ethereum's problems.
And there's also an element of disposition. I was listening to Tolly on a podcast. I think it's called Unchained, and there was this guy Hassan and this other guy that has some like I don't know, green hair, and one of the things that they were observing is like we were very critical about Solana, but every single element that we were critical of, you actually have fixed it. And Tolly's response was like, you know what? That's actually when I get the very stressed is when no one is actually criticizing me. And so it's this disposition of always upgrade, ship, change, and that just gives you it's like it has the real culture, the driver that push it. So you're always going to get a better result because I don't know, builders that come from the research academia have a different perspective of how to execute versus an engineer. And so I think that's a crucial element.
Absolutely.
Continuing on the, just to make this quick short, because I still have one more question that I'm dying to ask you for, because it's a very good intellectual exercise. I obviously, and almost everyone that it's on our chat and our podcast, we have bought the Saga and the Seeker. But sometimes I fall short on explaining what's the game theory the team had behind launching hardware, which is super complicated. What's the game theory of Solana launching hardware devices?
There's kind of a near term and then there's a long term answer. The near term answer is there's a set of people out there who are hardcore power users who want a kind of best in class crypto mobile experience. That group of people is not that large. Maybe it's 50,000 people. Maybe it's 200,000 people. Maybe it's 500,000 people. I doubt it's more than that. But those people want to pay for the kind of best in class crypto mobile experience. And so I think in the near term, Saga and now the upcoming Seeker support those people. And by the way, I have my Saga right here.
Yeah, cool.
Yeah. And then there's the long-term answer, which is the more important one, which is, we want crypto we want what is the Seeker experience to be available to everyone in the world. And the only way that's going to happen is obviously if Apple and Google integrate and implement, the basically Seed Vault SDK and the customizations that Anatoly and the Solana Labs team have made in their operating systems. And so the hope is that by doing all of this work now, having it be open source, it becomes much easier for at least the other Android OEMs, Android phone manufacturers, to go ahead and incorporate this stuff. Again, Google is probably not going to incorporate this upstream into the core Android code base in the near term, but there is a case to be made that Xiaomi, Samsung, LG, whoever else will choose and say, you know what, we think some percentage of our customers want these additional crypto features. It doesn't cost us anything to integrate all of the software that Solana Labs is building. It's free, it's open source. May as well put it in there. And the moment we get to the first tipping point, in which one of those guys does that, now the potential user base for a first-class crypto mobile experience just increased dramatically. And so the goal here is like, we've got to push towards this bigger objective. And these are just the baby steps, you know, towards getting there.
So, okay, I actually have both, and they're pretty cool. And a bunch of my friends here bought them in Colombia, and they actually traded their iPhones and just kept their Saga. So it's pretty cool. Now, the question that I was longing for, and so I bought my first Bitcoin in 2013, and since then I was convinced of the thesis. I read almost every single blog post from Nick Szabo, and so I took the pill. But in order for you to adjust, you always need to have neuroplasticity, because if you become static, that's when you start losing your edge. And then I started listening to you and certain comments, and they were, I'm not going to say they were counterintuitive, but I liked their takes. And you make me think, you make me double think things that I already consider static in my brain. So I always have an open gate to listen to the counter argument of why not something. And for example, in the little chat that we have today, the single biggest message was like, I don't know, Michael Saylor did a 25 billion offer to just buy more Bitcoin, and it just keeps doubling down. But what I listened from you and Anatoly always has this little anchor of like, maybe Hernan, you should revisit this. In fact, if you ask Camilo, a few months ago, Camilo, from his own personal stash, he and I at some point concluded, you know what, maybe we should trade Bitcoin for Solana. Obviously not financial advice, but I'd like to explore your take of why people should not be so anchored on an idea and not be open to rethink or consider, because I think that's the most important exercise an investor should do. It's not that the price is changing, it's what is the thesis that validates why you made that investment, and what if there is a better thesis about of another investment that should make you reconsider. So yeah, I'd just like to hear your take on Bitcoin and what you mentioned in other podcasts, and which I find super interesting.
Yeah, I'm probably the only, you know, high-profile crypto fund manager who does not like Bitcoin or Ethereum, which is pretty strange.
Probably why we follow you and why we are always studying what you say, because you got to give everybody the opportunity of take the other route.
Yeah. The reason I don't like Bitcoin, kind of a couple, but the most important is that Bitcoin is fundamentally a non-productive asset. Meaning, Warren Buffett is very famous. He hates gold. And the reason he hates gold is he says, you know, if you took all of the gold in the planet Earth and put it in a room, it would be, I think, a cube roughly 68 feet on each side or something like that. Maybe it's bigger. I don't know. But put it all in a room. And if you come back 50 years later, it's just the gold is sitting there. It hasn't moved. It hasn't done anything. It's not economically productive. And so he has always hated gold because he wants to own businesses that produce profits. And I basically hold the same view. I generally do not align with Warren Buffett's investment style. I generally prefer risk and growth to value. But on that basis, I agree. I only want to own economically productive assets. And you might say, well, Kyle, you know, Bitcoin is an inflation hedge or whatever. And to that, I think there are many productive assets you can own that are naturally inflation hedges. The most obvious of which would be any businesses that are fundamentally commodity based, whether that's a company that cuts down lumber or runs a coal mine, or is a retailer like Walmart or Amazon. All of these businesses, gold miners, these businesses, naturally their inputs are, some natural resource somewhere, and they sell that product, and it's a general, commodity that kind of goes into the basic functioning of the economy. And so if you're worried about inflation, you can both get the inflation hedge and own an economically productive asset at the same time by buying any commodity linked business. So I've never bought into the argument that like we need non-sovereign money. That's just like why there are other ways to achieve the same objective. So that's my first problem with Bitcoin. And but then my other problems with Bitcoin are more in the weeds, in terms of, I think the design of the system is just objectively bad. Obviously, there were a lot of breakthroughs Satoshi had in 2009, and those breakthroughs ultimately helped get us to where we are today. I don't want to trivialize those, but like in any new software paradigm or any new technology paradigm, the first version of it never gets it right. Of course, you come up with an idea and then you iterate on it and you iterate on it and you iterate on it. And Bitcoin effectively stopped iterating in 2009. They had a brilliant breakthrough, it launched, and the core system has not changed in any substantial way since then. By design, like that is the defining feature of Bitcoin, is that it doesn't change. And there are things that we know are objectively suboptimal. The 21 million supply cap is going to lead to security problems. The proof of work system is slow and does not provide finality. And it's just obviously wasteful in terms of energy, and so I look at these systems, I'm like, these are just obviously suboptimal parameters. And like, we can do better. And that's not even a theoretical statement. We can do better. Like, there are objective systems today in production at scale that are better on all of these fronts. So, yeah, I've just never been a big Bitcoin fan.
That's actually a very interesting take. And when we'll have to rewatch this episode and actually break it down, and Camilo discuss kind of like the intricacies, because you make a point. It's you're basically buying Bitcoin because you think that fiat technology is bad. So you're just buying it because the other thing is bad. And that is a very simplistic view. And I'm being very reductive here just to make a point, but it's a simplistic view. Now, it could still be a good investment if you live in countries like Venezuela and Argentina and even Colombia. We were growing up and we were used to inflation at 40%. So when you present us this new technology, yeah, that's easy for us to visualize. But when you look at under the microscope of the things that you just described, then you have to throw a little bit of more brain power to it to derive to more interesting conclusions of why you should do it, or just go balls in on it. So that's a very interesting take. Camilo, do you on Bitcoin, do you have anything else to ask before we get on the round of questions you have for Kyle on Bitcoin? Because I mean, the reason you switch is it looks. I mean, we switch because we see more potential on Solana. That's it. That's our personal belief, and we, as a technology, we think it's better. I don't know if you have a different point of view there, Camilo, or that you'd like to ask Kyle.
No, I don't. Hey, Kyle, I haven't said hello. No, I don't. I actually still own a little bit of Bitcoin, and as Hernan just mentioned, we debate constantly on how to evolve our investment thesis. So thanks for planting those seeds for us. I actually did have a question, or a couple of questions, just stepping a little bit back on you as a professional investor, because we constantly see in our ecosystem in LATAM that people that are joining or studying or starting to invest are mainly speculators. They want to make money quickly and they want to go in and out. You as a professional investor apparently chose a thesis-driven approach, and that's, I must imagine it's long only, and are not necessarily a trader. I don't know if you are, but maybe my question is, what would you say to those people that are wanting to come in to go in and out quickly in this world that's very volatile versus a thesis-driven approach?
Be clear about if you're going to make a decision to do something, whether it's a buy decision or a sell decision. You should really think clearly about what edge do you think you have. And I think most people are pretty loose with that. So I would encourage you to be tighter in your thinking. And the other comment I would make is there are different sources of edge in the world. One edge is being smarter. A lot of people think they have that edge, although they don't. Another edge is informational edge. Another edge is time horizon. There's a few other types of things. But I would argue that the easiest form of edge, of structural edge that you can develop is just duration or timing, meaning, and like for example, if you buy a bond that's a 10-year bond versus a 1-year bond, you'll get, in most cases, a higher interest rate. And so like being patient will reward you for that. And similarly, I believe in investing, the same holds true. If you say, look, I'm going to ignore what I think is going to happen. Well, if I ignore what's going to happen in the next 3 months, can I develop a higher degree of conviction about what might happen in 6 or 9 months? And if so, like you will typically be rewarded for thinking longer. I think as the easiest form of edge to adopt is that one. The other forms of edge are harder to develop.
Well, thanks for that. In that long-term edge, could you, and again, stepping a little bit back, could you talk about a little bit about your, Web3 worldview in terms of, again, going back to Hernan's point that this is a world where the content that we consume is extremely technical, is intellectually sophisticated, that points to somehow like niche populations, like niche targets. But then again, the whole idea of decentralization is to empower individuals, and that should be massive. Could you maybe just paint for us how you view this world outgrowing that niche community of people that understand technology and maybe finance at a very deep level?
I mean, the way it'll outgrow that niche is through just adoption, and that adoption's happening. Stable coins are being adopted all over the world. DePIN is growing all over the world. So it's just kind of those things just need to naturally happen, and they'll continue to happen. Today, if you're a customer, I know Helium Mobile is not available in Colombia.
No, we have hotspot. We have the hotspot, the IoT here. Yeah.
Right. You have that, but I'm saying the consumer cell phone plan.
Yeah, not yet. Yeah.
Not yet. And so, but like in the US, that's available, and like no one knows there's crypto there. You just sign up for a cell phone service. It's great. And so, these kinds of applications are starting to roll out, and they'll continue to roll out over time.
Do you see, for instance, I wanted to go back 1 second to your health tech background. I was curious about that because I see some ideas around decentralization and empowering individuals with their health data and so forth. Do you visualize what would the application in healthcare be that helps strengthen that very fragile, very necessary part of the world?
None. I don't think crypto has anything to do with healthcare.
All right. And the other piece I wanted to put on the table is we have a very recent, very dynamic dialogue in our chat around the meme space, meme coins, which I wanted to just briefly discuss with you. I read this book by a partner at Union Square Ventures called Albert Wenger. He wrote a world called World After Capital, and he talks about scarcity, and then after capital comes the scarcity of attention. and that there's no market for attention. And then come meme coins, which apparently is exactly that. And our debate is, are meme coins actually useful? Do they have some long-standing value? Are they supposed to be there for a long-standing value for something else? So maybe my question is, if you could, just provide us your framework or your view on how you analyze the meme coin space today.
I think we don't really, because we don't think we have edge there. So are there ways to develop edge in meme coin trading? Maybe. Do I think I'm going to figure out that edge? No. Not even worth going further than that. For Kyle at Multicoin. May not be true for you.
And I think, Camilo, that's very important. Going back to the question of, what type of investor, you got to recognize immediately where your edge is and what are your time horizons, because it allows you to identify which is the type of asset that you're going to invest. That's extremely important. And people get confused, like you were saying, Kyle, like, oh, I think I'm smart. Well, maybe you're not. Well, I think I'm very emotional, so I can't do trading, because then I have to just hide the stuff that I invest, write it in a paper, and like, this is the thesis. If the thesis, the underlying element changes, then I will sell it. Otherwise, I won't touch it. So one of the things that we always try to procure in and has been a constant element of discussion is, what does your diet of information look like, so that you currently maintain your edge? What type of information do you consume? We obviously ended up, we learned about you because we were consuming information from Solana, Anatoly appeared, and eventually you started to appear on the feed, and we started studying you. But what's your daily, weekly, what type of your diet of information? What do you just wake up and look at the market and see what the prices are, or you have a more rigorous discipline, like, I know whatever is noise, I'll put that aside, and these are the things that I'm looking into. What's your current diet of information, Kyle?
I generally think looking at prices ends up screwing up your brain.
Too much dopamine.
So I try not to. Well, and specifically, it ends up shortening your horizon. Like, there's just something psychological of like, oh, I woke up today, the price was 70,000. I woke up yesterday, the price was 68,000. I wake up tomorrow, the price is 72,000. There is, I can't explain to you what's happening, neurochemically in your brain, but I'm fairly confident that it shortens your horizon. So I generally try not to look at prices. My information consumption is pretty simplistic. I read a lot of Twitter, ton of Twitter, and I'm very active on Twitter, as you may notice. And I read a lot of email newsletters. I probably read 20 to 30 email newsletters per day, some of which are crypto specific, some of which are not. And then I listen to podcasts. Again, I probably listen to 2 podcasts per day. So, and I'm listening at usually 1.75. I'll do that while I'm on a walk or on my bike or something. But yeah, my goal is just to consume as much information as possible.
And when you consume the information, do you write? Do you, or you just let your brain, like, if my brain is interested, it'll remember it. And I tend to do the same thing. If I remember, it's because I'm interested. If not, I'll let it go. I mean, do you have any method of, like, after you consume all that information, how do you digest it? Or if it sticks, it sticks?
I am in my space an expert, and 99% of what I am reading is not telling me anything new, and 1% is telling me something new. So I don't need to take notes on 99% because it's like I'm not learning anything. But my goal is always to uncover that next marginal, 1%. And typically, whenever I find something that's not new, I don't have like a notepad for writing it down, but that typically means I'm taking some action, whether it's calling someone, reaching out to the founder, sharing it with an existing portfolio company. But there's typically some action that follows from that, and that action naturally produces follow-on discourse of some form. And that I think is good. That's kind of how I'll, fully digest and internalize something.
Okay, cool. Very cool. Oh, Camilo, I don't know if we have any additional questions for Kyle because we want to be respectful of his time, but I mean, this is a lot, and hopefully, I don't know, in a year or so or 6 months, we can do a follow-up because this is the type of alpha that we like, and you don't get that style of investor who it's weird, but most investors do not take the time to think, and that's almost like an oxymoron. But Camilo, you and we identified there's a multitude of time. There's investors that think that they know, but there's investors that have really thought and develop a mental model or a thesis about something. So it's great having you and taking the opportunity to share with you so much knowledge. I don't know, Camilo, if you have anything pending that you want to ask Kyle or Dario?
No, I don't. I think we covered what we wanted to talk about. Kyle, I appreciate your time. Thank you.
Hey guys, thank you for having me on the show. Pleasure to be here.
Hopefully you could come to Medellin one of these days.
I would love to make it down.
Yeah. How many kilometers do you bike on a daily basis? 30, 50, miles then?
A normal bike ride day is 10 to 15 miles, just quick and light on my bike. And then longer days will be 30 miles.
Okay, cool. All right, cool. Kyle, appreciate it. Thanks a lot, man.
All right, thanks everyone.
Bye bye.
Take care, Kyle.
Muchas gracias. Chao.
Bye.
Chao.
Perfecto.
Está grabando. Si quieren comentar.
No, we can stop. We can stop
Okay.
recording.